Welcome back for the final part of our deep dive. We've covered a ton of ground, from the types of loans out there to all the ins and outs of the application process. But now it's time to zoom in on those details that can really make or break a deal, those tricky interest rates and fees.
You're right. Understanding those is crucial for making smart choices and getting the best terms for your loan.
So let's start with interest rates. I know they can be all over the place, depending on a bunch of factors. What are some of the things that influence those rates?
One of the biggest is your credit worthiness, both personally and for the business.
Right.
A good credit score shows lenders you're a responsible borrower, you've got a history of paying your debts on time. The better your credit, the lower the rate you'll likely get.
Makes sense. It really pays to build that credit history before jumping into commercial real estate. What else are lenders looking at when they're setting those rates?
The type of property matters too.
Oh, okay.
Different property types have different levels of risk for lenders. For example, a well-maintained apartment building, multi-unit, in a good location, that's generally seen as a safer investment than, say, a single-tenant retail space in a less established area.
So it's not just about the building, it's the whole picture, the type, the location, the condition.
Exactly. All those things feed into the perceived risk. And then, of course, there's the loan term.
Right.
Shorter-term loans usually come with lower rates because the lender's money is at risk for a shorter time. Longer-term loans might have a slightly higher rate to make up for that extended risk.
So it's a trade-off then.
It is.
Lower rate versus having those payments spread out.
Exactly. And then you've got those broader economic factors that come into play.
Like what?
Things like inflation, the overall health of the real estate market. Lenders adjust their rates to reflect those market conditions.
So lots of moving parts go into those interest rates. Is there any way to get an idea of what those rates are like before I even apply?
Absolutely. You can check with different lenders, see what rates they're offering for the type of loan you're looking for. It'll give you a general sense of the market. Keep in mind, those are just preliminary estimates, though.
Okay, so it's kind of like comparison shopping for loans.
Exactly. And don't forget about mortgage brokers.
Oh, right.
They can be super helpful. They work with multiple lenders and can often find you those more competitive rates and loan terms.
That sounds pretty valuable.
Yeah.
Okay, so we've talked interest rates. Now let's get to those fees.
Yeah.
I know there are origination fees, closing costs. What else should I be prepared for?
Those are the big ones. Origination fees are basically what the lender charges to process and underwrite your application. It's usually a percentage of the total loan amount.
Okay.
Closing costs cover all sorts of things that come with finalizing the loan. Title searches, insurance, legal fees, that kind of stuff.
So all these little hidden costs lurking in the shadows?
That's why it's so important to read those loan documents carefully. Understand all the fees involved. The good news is many of these are negotiables. Don't be afraid to ask to reduce them, especially if you've got a strong financial picture or if you've got a good relationship with the lender.
So sharpen those negotiation skills. Got it. What about those prepayment penalties? Those sound kind of scary.
Prepayment penalties are designed to protect the lender's income.
Okay.
They come into play if you pay off the loan early, before the term is up.
Right.
It's a way for them to recoup some of that interest income they earned.
So if I see that in the agreement, should I be worried?
Not necessarily. It's pretty common in commercial loans, but it's definitely something to talk to your lender about. You can try to negotiate a lower penalty or maybe a structure where it goes down over time.
Okay, so it's about being informed and asking questions.
Always.
And advocating for the best deal. What if those traditional bank loans just aren't an option for me? What are some other ways to finance a commercial property?
There are tons of alternative options out there that might be a better fit. Remember those we touched on earlier?
Yeah, refresh my memory.
One option is seller financing,
Right.
where the current owner of the property actually becomes the lender. That can be a win-win for both sides.
How so?
The buyer might get more flexible terms, and the seller gets to earn interest income.
So you're cutting out the bank as the middleman.
Exactly.
What are the pros and cons of that?
Well, seller financing can make the whole process smoother and maybe even faster. It can be good for properties that are harder to finance traditionally, like unique or specialized buildings. But interest rates might be higher than what a bank would offer, and it's super important to get all the terms spelled out clearly in a legal agreement.
Okay, seller financing is one option.
Yeah.
What about crowdfunding? I know that's becoming more popular for real estate.
You're right. Those platforms are gaining traction. They connect developers with investors who are looking for different ways to invest their money.
Right.
It can be a good choice for projects that might not be attractive to traditional lenders, but it comes with its own set of risks and regulations, too.
So, opportunities, but be cautious. What other alternative routes are there?
Have you thought about a lease option? It's like a combo approach, mixing leasing with the option to buy the property later on at a price you agree on up front.
Oh, interesting.
It can be a way to test things out before you fully commit.
Right, you get to experience the location, see how the market's doing.
Exactly. Then you decide if you want to buy. And those are just a few examples.
Wow.
There are private equity funds, hard money lenders, all sorts of specialized options. The important thing is to do your research, think about your options, and pick the one that works best for your goals and your risk tolerance.
So, there's no one right answer. It's all about finding that perfect fit. Well, there you have it, folks. A deep dive into the world of commercial real estate financing. We covered a ton, the different loans, those interest rates and fees, even alternative ways to finance a property. I hope you're feeling more informed and confident about taking that next step toward owning your own piece of commercial real estate.
Owning commercial property comes with responsibilities, but it's also packed with opportunities for growth and success.
So stay curious, stay engaged, keep learning. The world of commercial real estate is constantly changing, but with the right knowledge, you can make it work for you. Until next time, happy investing, everyone.